Larangan ng malalaking multinational na company, isang pangkaraniwang hamon ay ang maayos sa pamamahala ng pera. Dulot ng pangangalaga ng maraming bank account sa iba't ibang subsidiary, ang decentralized setup na ito ay nagdadala ng komplikasyon sa pagsusuri ng individual na balanse at paghigpit ng kakayahang maipasa ang pondo ng centralized. Upang malutas ito, karaniwan ng lumalapit ang mga company sa cash concentration. Ito ay naglalaman ng pagsasama-sama ng pondo mula sa iba't ibang accounts gamit ang physical na sweeping o notational pooling. This chapter ay naglalantad ng mga strategies and mechanics ng cash concentration, shedding light on the required policy at control para mas mabilis ang napamamahala ng pera at efficiency in multinational financial operation. Benefits of cash concentration. In early phases of development, maraming bank accounts ang inaasikaso ng mas maliit na kumpanya. Isang trabaho ng karaniwang tinututukan ng assistance controller. During this stage, occasional cash transfers might occur to cover overdrafts and minimal interest income generated. Ngunit habang lumalaki ang mga kumpanya, ang pagdami ng bank accounts ay nagre-resulta sa malalaking idle cash balances. Upang malutas ito, madalas ay inia-appoint ng mas malalaking kumpanya ang isang treasurer. Ang treasurer ay nag-advocate para sa pagtatambak ng pera mula sa iba't ibang accounts na nagbibigay diin sa mga benepisyo ng mas mataas sa kahusayan, pinabuting pamamahala ng pera at potensyal ng pag-angat ng kita ng interes. Elimination of idle cash. Ito ay tumutukoy sa mabisang paggamit ng available na pondo instead of keeping excess cash sitting idle. Naghahanap ang mga organisasyon ng paraan upang ito ay ma-invest or utilize para sa productive processes. Maaring ito'y kasama ang mga investment, pagbabawas ng utang o iba pang gawain na nagdudulot ng kita. Improve investment returns. Sa pamamagitan ng aktibong pamamahala at pagnenegosyo ng pondo, layunin ng mga organisasyon na makamit ang mas mataas sa kita kaysa sa pagpapahinga lang ng pera. This involves strategic decision kung paano ilalaan ang mga resources sa paraan ng favorable financial outcome. More cost-effective oversight account. This likely pertains to managing accounts at financial resources sa paraang pumipigil sa pagtaas ng cost. Maaaring isama dito ang optimizing banking and financial structure to reduce fee, improve efficiency, at tiyakin na ang gasto sa pagsusuri ng accounts ay nararapat sa mga benepisyo na natatanggap. Internal funding of debit balance. Sa halip na umaasa lamang sa external sources of funding, maaaring gumamit ang mga organisasyon ng internal na resources tulad ng kita o maayos sa pamamahala ng mga pondo upang bayaran ang mga debit balances. Ang ganitong paraan ay maaaring maging cost-effective at nagbibigay ng mas malaking kontrol sa kaligtasan ng pinansyal. Complete decentralization. In this scenario, all function and decision-making processes are distributed across various entities or nodes. Walang central authority at bawat unit ay umaaksyon ng independently. This model often aligns with decentralized technologies tulad ng blockchain kung saan walang iisang entity control, nagpapalakas sa transparency at reducing the risk of a single point of failure. Centralized payments, decentralized liquidity management. Ang setup na ito ay naglalaman ng central authority na namamahala ng mga payment processes habang ang liquidity management is distributed among various entities. Ang centralization of payments ay maaaring mapabilis ang mga proseso ng transaction, habang ang mga decentralized liquidity management ay nagbibigay ng flexibility and local optimization na maaaring magbawas ng panganib. Centralized liquidity management, decentralized payment. Liquidity management is centrally controlled, nagbibigay ng unified na paraan ng pamamahayag sa financial resources. Sa kabilang banda, payment processes are decentralized, nagbibigay daan para sa mas localized or specialized handling of transaction. Maaaring ito ay angkop para sa mga organization na may iba't ibang pangailangan sa bayad ngunit nangangailangan ng centralized control over their financial reserves. All functions centralized. Sa ganitong sitwasyon, ang parehong bayad at pamamahala ng liquidity ay centralized. Ang lahat ng decision-making and control are consolidated in a single entity or system. This can offer uniformity, efficiency, at pinadali ng mga proseso, ngunit maaaring kulangin sa kakayahang umangkop at magbigay ng pagbabago na ibinibigay ng decentralization.
Pooling concept, cash pooling. Cash concentration requires that a company create a cash pool. These are the four types of cash pooling. The first one is subsidiary account. The second one is concentration account. The third one is physical sweeping method. And the last one is national pooling. Yung cash pooling raw po is tumutukoy sa pagsama-sama ng iba't ibang uri ng bank account ng isang company papunta sa iisang bank account, na kung saan na-maintain nila yung efficiency ng isang bank account. Zero balance sweeping transaction. When a company set up a zero balance account, is a bank automatically move a cash from that account into a concentration account. Ang zero balance account o ang SBA ay isang checking account na kung saan ay pinapanatili nila ang balance sa zero. For example, pag ang pondo ay kailangan sa SBA sa saktong halaga ay kinakailangan agad ang pera, ay automatically naililipat agad ito mula sa isang central account. Physical sweeping. The first one is balance before sweep, concentration account. The zero initial balance, local bank account. Letter A, 10,000 balance. Letter B, 25,000 balance. Letter C, negative 5,000 balance. The second one is move credit balance to concentration account. Concentration account, 35,000 balance. Local bank account. Letter A, zero balance. Letter B, zero balance. And letter C, negative 5,000 balance. And the third one is move funds to local account to clear debit balance. Concentration account, 30,000 balance. Local banks account, zero balance. Letter B, zero balance. And letter C, zero balance. Daily sweeping may not be necessary outside of a company designated core currency. This is especially likely when a non-currency account balance are relatively low. These are the four types of physical sweeping. The first one is subsidiary level of financial reporting requirements. The second one is interest income allocation. The third one is interest expense allocation. The last one is central bank reporting. National sweeping. National pooling is a mechanism for a calculate interest on that combined credit and debit balance of account that a corporation parents choose to cluster together without actually transferring any funds. Ang national pooling po ay isang mechanism para sa pag-calculate ng interest sa pinagsamang balance, credit, and debit ng mga account. For example, consider as a corporation that has three subsidiary account, subsidiary A, B, and C, and each subsidiary has been own bank account without the following end of the day balance. Subsidiary A, 20,000 credit. Subsidiary B, 10,000 debit. EA, an overdraft. Subsidiary C, 5,000 credit.
Comparison of account sweeping and notional pooling. So first, account sweeping is the transfer of funds. The funds that exceeded the average balance will be automatically transferred or swept from the primary cash account into secondary investment accounts. It is an easy way to make sure the money is making a return instead of sitting in a bank account with poor interest. Conversely, notional pooling is a method of cash centralization that keeps funds under local management while having them appear to the bank as like they have been centralized. So if mamimili ng better alternative ang mga companies, mas prefer nila ang notional pooling since hindi nagtra-transfer ng cash physically ang notional pooling, nababawasan nito ang amount ng intercompany loans. If yung parent company ay nag-a-allocate ng interest based sa balance ng kanyang mga subsidiaries, they need significant accounting sources para makalculate yung interest income nito. So, in multi-currency situations, binabago nila yung interest income sa iba't ibang currencies since involved dito ang iba't ibang bansa. On the other hand, nagsasagawa sila ng interest calculation process para matransfer yung funds sa kanilang subsidiary at the end of the month para makover nito ang interest income. In this situation, if you use account sweeping, gagamit ang company ng foreign exchange transaction, but if notional pooling naman, walang pagpapalitan ng currency na magaganap since hindi ito nagtatransfer ng cash. Aside from that, sa account sweeping, nagkakaroon ng tax consequences in some countries dahil sa pag-transfer ng cash. But in notional pooling, walang natitrigger na cash consequences since hindi nga ito nagtatransfer ng cash. Ang downside lang ng notional pooling is that illegal ito sa ibang countries because the government believes that such pooling constitutes a commingling of funds from different entities. And hindi din ito allowed sa bansa natin. Non-pooling situations. It might be necessary for a business to use a local bank that isn't connected to its notional pooling or corporate account sweeping systems. Therefore, yung mga account balances of a company's bank needs to be manually maintained. Ang major goal nito is to prevent overdrafts since ang cost nito ay mas mataas kaysa sa interest income na nare-render ng account na yon. Ang overdraft kasi is a deficit bank account caused by drawing more money than the account holds. So, ang non-pooling situations ay hindi na kinakailangang mag-transfer ng accounts dahil mas prefer ng parent company na ma-maintain yung excess cash balances in their account in order to prevent overdrafts. Additionally, limiting the quantity of transfers into or out of these accounts is more economical from a labor standpoint because account management is manual. Bank overlay structure. Bank overlay structure is a tool used to consolidate money at a global and regional levels whereby it allows the centralized management of money. It has a bottom layer that contains in-country banks that are used to deal with local cash transactions and a top layer which comprised of a group of regional banks or perhaps a single super bank that operates a global level. Yung top layer bank or yung consolidation account na pinapakita dito ay ang nagme-maintain ng separate bank account ng company or yung overlay account sa bawat bansa kung saan siya nag-ooperate. Yung cash balances na located sa bottom layer of banks or yung local bank account ay nag-shift or napupunta sa accounts na name-maintain ng top layer of banks. This may be conducted with manual transfers or standard authorizations issued to local banks or via SWIFT messages from the top layer banks. So under this arrangement, yung banking transactions na naikakonduct sa bottom layer of banks ay nag-shift papuntang top layer of banks.
Good day, everyone. I am Blessed Joyce Francisco, one of the members of the Group 4, and I be reporting the cash concentration controls under the cash concentration chapter 4. So, there's a strong argument that having a physical sweep cash concentration system in place is a control, since it pushes all cash balances into a single location for easier monitoring. Kasi hindi ito maayos at mahirapan mag-ayos ng mga treasury stuff kasi magjajumble ang mga accounts. So, control, it's a structure that helps a treasurer layer in a complete and responsive account level and transactional controls. It is well-designed, real-time visible concentration structure will give treasurers a high degree of direct control across banking relationships and over their funds, while alleviating liquidity and counterparty risk and protecting assets and data. This means that they would be able to take instant and on-demand action from anywhere in the world. As global market conditions fluctuate, the company's fortunes change or pressing financial needs arise. Corporate treasurers should be able to modify target balance parameters or suspend or reactivate sweeping. The following controls can improve on the inherent control of a physical sweep system. The first one is review target balances if yung subsidiary account is allowed to target a cash balance, then kailangan mo na i-time to time na i-review ang account to see if the target balance is appropriate. Then, the next one is review excluded accounts. May iba kasing subsidiary accounts na hindi excluded from the sweeps on the ground that are local currency restrictions, or that minimal transaction activity does not justify a periodic sweep. So, these factors may change over time. So, schedule an annual analysis of excluded accounts. So, the next one is compare intercompany loan rates to market rates. Ano ba itong loan rates? Ginagamit ito ng mga treasury staff para ma-determine ang amount, ang intercompany loan na cost ng physical sweeping from the subsidiary account into the corporate cash concentration account. Kapag ang company is gumamit ng non-market interest rates when calculating intercompany charges, pwede magkaroon ng conflict pagdating sa pag-transfer ng pricing rules in some tax jurisdictions. Thus, it creates a tracking procedure to review time to time and compare market rates to the intercompany loan rates. Verify the allocation of interest income to subsidiaries. On the circumstances, it may be necessary to allocate interest earned back to the subsidiaries. If so, verify that the calculation is consistently applied across all subsidiaries. Pag sinabi kasi nating interest income, ginagamit ito ng treasury staff to calculate the interest income earned from the investment of cash concentration activities less the administrative discharge. Sa pag-calculate ng allocation nito, kailangan mong i-summarize ang interest income for the month as reported in investment statement. Second is i-summarize or i-record ang interest income as corporate income with the debit to cash and credit to the interest income. Third is calculate the administrative expenses that associated with the administrative of cash concentration. Kasama na dito ang mga bank pooling fee or labor expenses. Fourth is subtract mo ang administrative expenses sa total interest income earned. And last is allocate yung natitirang interest earned to the subsidiaries on the outstanding to the parent company during the month. And the last control is to verify the calculation of intercompany loan balances. A company using physical sweeping may need to record intercompany loan balances to reflect the shifts in cash. Cash concentration policy. There is one key policy required for cash concentration, which is one that places responsibility for cash concentration on a specific group within the company. Otherwise, it can be extremely difficult to exert central control over far-flung accounts that are normally under the control of the managers of local subsidiaries. Then the policy follows, all cash concentration activities shall be managed by the corporate treasury department. In a large firm where divisional managers may try to retain control over their bank accounts, this can be an important policy. The policy clearly places the corporate treasury department in charge of cash concentration. Strategies for both small and large companies are noted in the following two policies. The first one is the small company policy. The company shall engage in a cash concentration with a physical sweeping strategy. All subsidiary accounts shall be designated as zero balance and shall sweep into the concentration account, which in turn shall be used as central disbursement account. Sweeping is not cost-effective. This policy works well for smaller entities using a single currency in location where notional pooling is not available. For the large company policy, The company shall engage in a cash concentration with a cross-currency national pooling strategy. All subsidiaries are restricted to accounts with the bank designated by the treasurer in areas where notional pooling is not available. The treasurer may opt the physical sweeping or no sweeping if it is not cost effective. This policy assumes that notional pooling will be organized under a single global bank and provide for the inevitable exemption that will arise in some jurisdictions.
So the next topic will be all about the cash concentration procedure. After a cash concentration system is configured, it should be completely automated, with the cash balances arriving in a notional account with a notional pooling arrangement or moving to a concentration account with the physical sweeping. Therefore, a technique to carry out the cash concentration is not required. However, the processes are required to manage intercompany loans, to allocate interest income to the subsidiaries, and track the associated interest expense allocation if the physical sweeping is employed. A company treasury management strategy called cash concentration involves moving all the money from the several accounts to the one central account in order to streamline the cash administration and cut the costs, or in short, in order to increase the cash management efficiency and reduce the fees. There are benefits in consolidating all accessible funds into one account. Because it's considerable, it may increase accessibility and visibility of the finances. And also, no money is sitting in interest bearing bank accounts. In addition, the cash concentration lowers bank service fees in the single account and facilitates easier cash flow monitoring. So, let us discover the cash concentration procedures by looking at the example. So, at this example, the subject is all about the tracking of intercompany loans and allocation of related interest expense caused by the physical sweeping. For this, the purpose is all about the treasury stop determining the amount of intercompany loans caused by the sweeping of cash from subsidiary accounts into the corporate cash concentration account, as well as the amount of the internal interest charge related to these loans. We had two procedures. First one is all about recording the intercompany loans and to allocate the interest expense, which is done by the treasury stock. So, the first one is to record the intercompany loans, which is done by the treasury staff, as I said. At the end of each month, we need to access the company's bank statements and calculate the amount of intercompany loans outstanding from each subsidiary to the corporate entity that was caused by the physical sweeps into the corporate cash concentration account. We need to add this amount to the balance of any intercompany loans that were outstanding at the beginning of the month. Next, we need to deduct any expenses related to each subsidiary's disbursement from the updated intercompany loan balance from the corporate shared services centers in charge of payments and payroll. Then we need to subtract the remaining intercompany loan balances from the amount of any cash flows from the corporate to the subsidiaries for other purposes, such as the debit balances, replenishment. Next is we need to calculate the incremental change in intercompany loan balance and create a journal entry to reflect the change. If there's an increase in subsidiary loans corporate, then the debit their notes receivable account and credit the corporate loans payable. If there's a decrease, then the entry is reversed. We need to also calculate the average loan balance outstanding during the month for which the procedure is indicated. And of course, the staff needs to keep a copy of the calculation so that he or she can use it for future reference. Then, the intercompany loan calculations must first undergo the treasurer, of course, for the approval. Lastly, after the forwarding it to the treasurer, we need to also forward the calculations in journal entry to the general ledger accountant for entry it to the accounting system. Next is the allocation of interest expense, which is also done by the treasury staff. Then first, we need to identify the market interest rate on debt. Then, this treasury staff needs to calculate the intercompany interest expense to be charged to the corporate, which is used for funding. A journal entry is created in order to reflect this interest expense. With this, we debit the corporate interest expense account, then subsidiaries interest income account is credited. In case of net flow of cash to subsidiary, the entry will be then reversed. Of course, the staff needs to retain the copy of the calculation for future references. Then, as procedure, the interest expense calculations and journal entry must be forwarded to the treasurer for approval. Then, forward this approved journal to the general ledger accountant for entry it to the accounting system. So, as we can see at the end, as we summarize this lesson, we must realize that the cash concentration is a key aspect of liquidity management and treasury operations. It helps companies in optimizing their cash management practices and reduce the cost of banking services. For it to be profitable, the business needs to have significant, continuous amounts in several accounts that are not being invested properly. Moreover, the incremental rise in administrative expense and pooling fees ought to be outweighed by the incremental decrease in overdraft fees and increased interest income. So, many companies prefer to use cash concentration as it eliminates the balance from the local accounts and provides maximum flexibility as to how surpluses are used or how deficits are funded. Cash concentration pools can also be structured to suit specific requirements of each company. So, it is better to have a preferred choice of pooling method than nothing at all. Many initiated transactions to transfer funds between accounts is time consuming, so manual sweeping is not advised. On the other hand, the option of using automation associated with these services is a greater choice, for it saves the time, labor, effort, and money of the company. So, with this, the topic about the cash concentration is finished. So, thank you for watching.